The number of messages I used to get 2 years ago, hate messages, is down 98%, and I'm not even exaggerating. And we haven't even gotten started on this crash. Big up and day down in the market today. The NASDAQ finished up about 0.5%. The Dow and S&P finished low, but this is where I want to show you guys. This is the entire S&P heat map. Technology, NASDAQ heavy technology. Look at all the big names that are up big. This is going to drive up values on market cap base index. Anything with 4 tickers is the NASDAQ and a few others, but this is financial services. And guys, regional banks. Actually, this is the full map. This isn't even just, this is the entire, all U.S. stocks listed on U.S. exchange, not just the S&P 500. And look at this regional bank stuff. Guys, the 3 biggest losers in the S&P today were 3 banks. FRC, First Republic, down 62%. CMA, Comerica, down 28%. KeyBank, down 27%. KeyBank based here in Cleveland. Guys, it blows my mind that we had the meltdown of several banks in the last week. We had 30 banks halted today to start the day because of the volatility and the fact they opened up so far down. Regional banks were down big. They were halted. And we still see the market ending up, the NASDAQ up, and the Dow and S&P, not much losses. And I look at this and think to myself, is this rational? I don't know. I mean, I'm not trying to compare the great financial crisis to today. I don't know how this is going to play out. If I understood how to value a bank, I would be much more likely to be able to say, banks specifically had this issue, or here are the safe banks. Just like if Google fell in half tomorrow, I would say, listen, from my impression, Google is a great company with strong cash flow, a great balance sheet. You're probably going to be okay, but expect some volatility, blah, 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 blah. With banks, guys, we don't even know anything that's going on with banks overall in general. How do you value them? How do you look at their cash flow? Look at this bank. Look at Silicon Valley Bank. 2 weeks ago, not a single analyst had Silicon Valley Bank as a sell rating. And now it doesn't exist. It was taken over the weekend, and all depositors were guaranteed their money. Okay. Now, what does that mean for the world? Well, where's risk then? If we're telling a bunch of banks, hey, listen, no one's ever going to be able to take a run on you, where's the risk tolerance of the bank's going to go? It's probably going to go up. Because the real reason, I mean, listen, I don't know the exact situation with Silicon Valley Bank, but I have to think that run on the bank was a major cause of the problem. Right? Peter Thiel coming out with Founders Fund saying, tell all of his founders, get out of there. Remove your money right now. That caused even a healthy bank, based on the reserve requirement, let's say it's 5%, they can be levered 20 to 1. If 10% of people say we want our money out and it's 10% of deposits, they're going to have a problem. It doesn't take much for that to happen. So even a healthy bank, if there's a run on them and people perceive there to be a problem, then it's going to cause the stock to go down and maybe the bank not to even exist. And that's what's going on with banks today. Now, obviously, Signature Bank that had a lot to do with crypto. I mean, we've seen a lot of crypto exchanges and things like that fall in the last year. And to a lot of people, that might be shocking. To me, I just laugh. It's not shocking. It's only going to get worse. For crypto, it's only going to get worse. For banking, I have no idea. I really don't have a clue because I don't know what the future holds here. But what I do know is that the market currently is very, very expensive. You look back at history, if you've seen other videos of ours, I have a stock market to GDP ratio that every single morning I share with our community in the chat. I update them based on where stocks ended the previous day. And right now, we're almost 60% overvalued based on historical metrics going back to 1929. 60% overvalued. History has shown that when the S&P 500, according to this, is overvalued more than 50%, you can expect a 0.5% loss per year for the next 10 years, not including dividends. So the S&P 500 index should be lower based on this 10 years from now than it is today. And for those of you who've never seen a really big bear market, and if you call COVID a bear market, I just giggle at that. COVID was not a bear market. You might sit there and say, this guy's crazy. It was down 40%. A bear market isn't just a number. It's just the feel of it. And that dropped for 1 month and rebounded. By August, it was back up, and then we went to record highs by big amounts. 40% beating the record high, 3,300 to 4,800. That's not a bear market to me. Now, the good news is that when things are actually bad, I will probably be the only person out there saying, great guys, great opportunity right now for all of us. That's why I want you to subscribe to the channel. That's why you need to share this video with people who get scared very easily, because all the other YouTube hypesters out there who don't understand value, who sell, go look at their history. When stocks were down, they were selling. Go look at my history. When stocks are down, I'm buying. I look forward to red days. I look forward to days in which the market's down, because that's an opportunity to buy companies I love for prices I love, and companies that I love that are too expensive, getting closer to the price I need them to be at in order to buy. And that should be your goal. The hard part is the emotional side. The hard part's not the numbers. All of our tools here will do all the numbers for you. Just put the numbers in, it'll spit out what you should pay for it. The hard part is being able to be calm when things are tough, to understand what you're buying when you're buying it. Right now, these markets are crazy. To see this on the S&P, Dow, and NASDAQ, after today, the NASDAQ, I think it was down 1.3% to start the day. It got up to like 1.5%, but I don't remember the exact number. Guys, these are 3-4% swings up and down all day. Does that seem rational to you? Does that seem confusing? Yeah, it confuses the heck out of me too. But all I sit there, it doesn't confuse me in a fearful way. It confuses me in a, well, we have a lot to figure out here. There's a lot of uncertainty out there. That's okay. Uncertainty gives the right investor the opportunity to buy at great prices. If you go look at the history of the S&P 500, I'm going to show you right here. This is SPY. If you go back to 1994, look at this. Uncertainty, 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 uncertainty. If I were to tell you if I were to ask you, pick the 4 best times in this chart to buy, you can only pick 4 times to buy, what would you have picked? Here, 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 and here. Guys, that's why prices fall, because of fear and uncertainty. However, if you realize that this is the S&P 500, the 500 largest companies in the US, and they're probably not going to go away, then you use the opportunity. Now, somebody else might go out there and say, oh, well, this is going to be an opportunity to buy. I saw Graham Stephan recently wrote, buying in the last 15 months is like buying in 2009. I cannot stress enough how wrong that statement is. That is complete lack of understanding of value. That's like me saying, hey, my house is worth $1 million. You know what? I'm going to ask 10 million. When it sits, okay, I'm going to ask 5 million. Look what a great deal it is. It's half off, but it's worth $1 million. I don't care if it's half off. It needs to be 90% off. That's value. If you don't get this analogy that I just put up there, I want you to do me a favor. I want you to unsubscribe. I want you to close your computer. I want you to call your spouse or the closest relative to you. I want you to give them all your money and say, please go piss us away on lottery tickets, because it'll do more good than in my hands. If you don't understand that if you base value just on where price levels are, you have no understanding, and you should not be investing in individual stocks. But you're smarter than that. I know you are, because you're watching this video. Price is what you pay, value is what you get. And your goal is to pay this price when value's here. Right now, it's this way overall. Now that's not a very popular statement right now. When you see these big YouTubers, when I see Meet Kevin out there with Kathy Wood taking a picture with her, and when I see other people saying, oh, well, they don't get crypto, they're just hype. Guys, it's all stupid. There's no coincidence that the best investors of all time buy great companies at great prices. It's no coincidence. Your goal should be to buy the best balance sheets for the lowest multiple of cash flow and earnings. If that is not your goal when you buy an individual stock, stick to the S&P 500 ETF. Stick to it. You're going to do very well. The only thing you need to learn is when things look most bleak, that's when I need to be buying. That's what you need to remember when buying. Try to put more money in when things look the worst. But you still need to understand the value of the S&P relative to history. And right now, we're 60% overvalued. 60%. We have been undervalued here. And look at the returns. If you bought here, you made 6.5% a year without dividends all the way to here. If you bought here, you made 13.5% with dividends all the way to here. Which one would you rather have? This one you still did fine, but stocks weren't as overpriced here as they are today. And not just because the chart is higher. You could buy way more earnings and free cash flow here than you can here relative to the price you're paying. But would you rather make 6.5% or 13? When stocks are going down, do you want to put less money in or more money in? That's the question you have to ask yourself. And once you've learned that, from us, you can start graduating to the next level, which is individual stocks. And that's what I did here. I was able to buy ETFs all the way down here, getting excited, scratching my head when friends of mine said, Paul, the stock market's going to zero when it was here. I was like, what? And I didn't understand the emotional side of investing then. I was just like, they really think it's going to zero? How could the US economy go to zero? That's what it would take for this to go to zero. But along this way right here, I started to understand individual buying of stocks. Along this way right here, I started to realize, wait, people can be irrational for a lot longer than I expected. And all along the way, I'm learning something new. It's just all along the way, there's something new to be learned. And the story here, and the story here are just different characters. .com, real estate, Bitcoin, crap, crypto, and EV. And guess what? 30 years from now, it'll be some other story. I don't know what it's going to be. You know what people are going to say 30 years from now? Paul, come on. Bitcoin and EV, that was so obvious. This was so obvious. This was so obvious. It's always so obvious in hindsight. But yet I'm called this perma-bear. Guys, I'm not a perma-bear. I'll show you the emails from here. Not a perma-bear at all. My bankers at Bank of America Merrill Lynch said I was the only fun call they had back here. So this is great stuff. Buy more. And I can't wait to be buying more. There'll be a problem here when what happens? When Google goes from $92 to $65 and I'm buying and people say, oh, you don't get it, Paul, Google's dead. These same people who at 150 said Google will never go below 100. That's just the way it has to be. So you need to decide for yourself what investor you're going to be. Are you going to be the investor who follows everybody else off the cliff? Go right ahead. More power to you. And then you'll blame somebody else, but don't blame somebody else. Just understand that in the long run, if you understand value, you'll be wrong in the short run and right in the long run. That's what matters. Warren Buffett is not right in the short run very often. He doesn't even try to be. But in the long run, he tends to be correct. Now, you might sit there and say, well, Paul, he's not even beating the market. You're correct. You know why? He's managing $250 billion. You know how hard it is to beat the market with $250 billion? It's impossible. You have to take $20 billion bets. How many $20 billion bets are out there? He'll be happy to just be in step with the market. But you yourself can absolutely beat the market. It's simple, but not easy. It takes an emotional fortitude to go beat the market. One of the best investors we've ever met, Monish Pabrai, was down 37% last year, or 35%, on par with Cathie Wood. And guess how he sleeps at night? Just like this. Why? He's making a big bet on Micron. He has 77% of his portfolio. He's fine with that because he says, in the long run, this will pay off. And then when he's crushing everybody, he'll be like, okay, that's great. Making highly concentrated bets. Now, I'm not that kind of investor. I'm not one to put 78% of my money into one company. That's just not going to happen for me. That's just not my style, but that's his style. And you have to find your style. The good news is I can still learn a lot from Monish and Warren Buffett, even though our styles are different, because the mentality is the same mentality. Buy, buy, buy. That's the key, guys. That's what matters. Buying when everybody else is fleeing. Now, you might see those fear and greed indexes on some website. That's too short term. You know what I want here? For us to get to a bottom, I want the kids who all graduated high school in the late 2000s all giving up because they've never seen a bear market. I need to see people giving up on Apple and Tesla. Those are the big ones. And we need to see people giving up on Bitcoin and other crypto. When I still hear people justifying Bitcoin and crypto, I just laugh. I just go, oh my God, these morons. And if you're one of those morons, leave hate notes for me in the messages. I love those hate notes. The more hate notes I get, the more I realize I'm right. Because it's not possible for so many people out there, especially 17-year-old pimply seniors in high school, to be right on some sort of investment. It's literally impossible. But everybody owns crypto, feels like, oh, we're in a community of crypto investors. We all believe the same things. Yeah, well, the problem is it's everybody. I'm looked at as weird for not being into crypto. This weekend, I was at a cafe and a Merrill Lynch guy said to me, cycles are over. I'm like, what are you talking about? And I just said, sounds good. He was a 90-year-old Merrill Lynch guy. And I left with my fiance. She goes, why didn't you talk to him more? I said, because he proves that just because you're 90 doesn't make you wise. Very nice gentleman. And When his birthday comes up, I'm going to send him an email and say, happy birthday. But guess what? He's 90 years old and still doesn't get value versus price. 3 guarantees in life: death, taxes, and cycles. And he's trying to fight, actually 2 of them, because he's 90 years old. He's trying to fight death and cycles. Guys, I'm sorry. And I hope my investment changes over time. It will. It has in the last 10 or 15 years. And over time, I will continue to make videos and you will see my change in approach. But fundamentally, I will still be looking for one thing and one thing only: value above price. That's what I want. If I can find those in great companies, I will be a buyer. And in the short run, I might be wrong. And I have to be okay with that. That's what makes investing hard. That is the art of investing. That's why we created this whole channel. And we have over 2,100 videos for that exact reason. So I need you to do me 2 favors. 1, subscribe to the channel if you're new, if you're not already turned off by my amazing arrogance and loud talking. And 2, send this to 5 people that will really appreciate it. And even if they hate on me, it's still wonderful for me. I love it. I love the hate because I see what happened 2 years ago when people call us idiots and dumb. Go look at the videos from 2 years ago. None of those people are around. I'm on Instagram and Twitter. Follow me on Instagram and Twitter. The number of messages I used to get 2 years ago, hate messages, is down 98%, and I'm not even exaggerating. And we haven't even gotten started on this crash. The crash hasn't even started yet, and already 98% of the haters are gone. I literally never get hate messages anymore. Why? And we have, like I said, all the companies, literally the companies we told you to avoid are down 90+%. And some of my companies I invested in are down 30, 40%. Guess how I sleep? Like this. And guess what I do? I buy more shares because I'm buying cash flowing businesses. And that's what's important. And in order to have crashes, there has to be uncertainty. And uncertainty is to come. And there will be a crash. When? I have no idea. And anybody who tries to say otherwise, tell them to shut the F up. They don't have a clue either. But eventually it will happen. And your job will be to be able to sit there and say, Paul said this would happen. The world's not going to end, even though it feels like it's going to end. And I need to keep buying my S&P 500 low-cost ETF. I'll be a very wealthy person because of it. Thank you very much for your time.